Hi, and thanks for joining us. This is TPL Media. I'm Mike, Paul Micucci. Today we are talking about retail. Paul, I drive around Ontario, and frankly, across the country, we've visited a lot of cities now.
Yeah.
And in each of those cities, we're seeing a pattern. Major flagship stores in shopping malls and in major shopping centers are abandoned.
Empty.
It looks to me when I see those that retail might be in trouble. I see Amazon expanding in Canada and I think, oh, retail must be in trouble. I see our GDP going down, inflation going up, and I think to myself, retail must be in trouble. But in fact, it's not. It's up.
It's up. For January 2026 compared to January 2025, it went up about $1 billion to $71 billion. So It is up. But we're spending more for food items now than we did last year. We all know that.
Yeah.
And that is the major increase in that scenario. So quite frankly, anything we put in our mouth now is costing us about $2 billion more across Canada.
Meanwhile, a lot of other sectors actually are pretty flat.
Are pretty flat or down. You know, you look at our auto industry, which we know it's down. We know new car sales are down. We know people are shifting to used cars, but how much? It's a lot.
And accessories for auto overall up across the nation, which means people are putting repairs and parts into their car rather than buying new. This and many other sectors we're going to investigate today as we're joined by Bruce Winder. He is a retail expert here in Canada. Paul, I thought for today's discussion, as you heard me in the monologue intro there, I'm a little confused by retail in Canada at the moment.
So am I, Mike.
Some of the numbers seem to be up, yet I'm going mall to mall, and as you do, and you're starting to see in these shopping centers more and more vacant space, more amalgamation. And I thought, okay, well, look, we can be confused and we can speculate. We do that very well. But instead, why don't we get an expert in? So Bruce Winder joins us. Thanks so much. Retail expert here in Canada and somebody you've probably seen quoted before on this. Thanks, Bruce, for joining us.
Yeah, thanks for having me on.
So, okay, maybe, Paul, you've made the observation that I've made that it seems like retail, especially with, you know, the Amazons of the world out there and some of the amalgamation and the shutdowns that we've seen, I don't know why, but I made the assumption out of the gate that retail was under some pressure in Canada.
Yeah, retail is a big business. You know, it's north of 600 billion a year in Canada, and it ebb and flows a little bit up and down, you know, depending on the month. Sometimes it's a little confusing too, because some data shows it's up month to month. The data you should really look at is sort of year over year. But either way, retail in Canada right now is sort of flat to up a little bit, depending on the timing. And you know, it's a big industry. It's not a broken industry by any means, but there are challenges, you know, with the industry, like every industry. And it does have a natural sort of circle of life effect where, you know, weaker players bow out and new players emerge.
What is the overall in the sort of retail space of shopping malls? Not too far from us here in Toronto is Sherway, which just lost two major retailers just up the street on the 427 on the right. In the last couple of years, lost another major department store retailer. What kind of effect are these major retailers packing up having on retail overall in Canada?
Yeah, I mean, the irony is that, you know, some of the retailers who've packed up and left, you know, you look at the international retailers like Nordstrom who packed up, and then Saks have packed up as well. They really didn't do a lot of business in Canada anyways. They had big footprints, they had big, beautiful stores, but they really, you know, missed the mark in terms of addressing, I think, the market in Canada. They may have overshot the runway and had too many stores. So you're going to see some of that. You know, you're going to see companies that come to Canada and it doesn't work. You're also going to see longtime Canadian companies like what happened with Hudson's Bay, right? And how they bowed out after, you know, hundreds of years. That's a bit of a different story too. But again, even Hudson's Bay, they didn't really do that much business in Canada. So it's not like, you know, a giant who commanded a huge amount of market share has left. It's very different in this regard.
Hey, Bruce, I gotta ask you a question. So, and this has been on my mind. We've been looking for some permanent space for our new studios, and we've been going kind of in and out of different commercial spaces, retail malls, and we go into these huge spaces, huge spaces that Target was in, Hudson's Bay was in, and they've been sitting empty for years now. You know, it, and I know it's hard to say because you can't get in the head of the people that own these businesses, but what do help me a little bit. What happens to these spaces? Like when the leases run out, and for the most part, I think they're kind of still living through, the back end of these leases that, are sitting empty. But at some point, they have to re-engage these spaces and they have to subdivide them. They have to find people to go in them. Who comes into that market? Who do you see being the retailer of the future that comes in to these subdivided large spaces that have been abandoned by these big box retailers who couldn't make it in Canada? And I wonder, I think to myself, I would be trying to actively do that now. And they seem to be these big malls that are across Canada. And we were just in Ottawa, we were just in Calgary, we got home to Ontario. And I said to Mike, do you notice everywhere we go, we see this, this is a challenge across Canada. What happens to these spaces in your mind?
Yeah, it's a great question. And it's one of the biggest challenges the industry is dealing with, particularly if you're a landlord of some of these malls. Now, whenever you deal with retail real estate, it's always very case specific, it's location specific, right? So, if you're in Yorkdale or the Toronto Eaton Center, that's a very different conversation versus if you're in a suburb and, you're overspaced. So, I mean, one of the things we've been dealing with as an industry is over the last 30 years, malls have changed a lot. Consumers have changed a lot. The way they buy changes a lot. More online, more with specialty stores. The whole department store sector has changed. It's shrunk considerably. It's in decline. That's why you saw Eaton's and Simpsons and a lot of those folks bow out over the last 20 to 30 years. So where we are now is we have all these legacy malls with big legacy footprints when department stores were the anchor of the mall, 30, 40, 50 years ago. Those days are gone. So what's happening now, depending on the property, is landlords are looking at trying to probably divide the space up, at least into a few different floors, and lease it to good retailers or good service providers for those floors. You look at what's happened in the Toronto Eaton Center, Nordstrom left, some of it went to Nike, some of it went to Italy on the side. Simons took a little bit. So that's sort of more what's happening in the good malls. In the malls that might not be tier 1 or A malls, they're struggling. They're struggling to find someone who's going to go in it. And there isn't some large sort of heir apparent who's looking to swoop in and take all that space. It's just not a market reality now for most malls.
Yeah, it's so interesting that you say the Italy model, right? Because recently I was in a situation in a mall, and it was obvious to me that a large retailer they'd taken one floor, made it a restaurant. The top floor was sort of a marketplace of different stores or shops or specialty retailers. But there was no indication that they were going to put another major department store in there.
Yeah, we were in actually one. It was basically an abandoned big box, and they had actually rented it out for movie storage.
Yeah, they put
which I thought was interesting.
Amazon's set storage space.
Which, based on the way that's going right now in Canada versus all these U.S. tariffs and, the movie industry that used to be robust in Canada, and it's changing now. I don't know what happens to that.
Well, we're storing our stuff at the malls, if that's any indication.
Yeah.
Right?
Well, and how much more storage? We've been on this rapid growth in storage in Canada. How much more storage space do we really need to be building? You got to wonder.
One of the things, Bruce, that I got to commend Paul for, as soon as we hit a topic, he does the numbers, and he finds some beauties in here. And I'll leave it to him to do this. But
sure.
As we went through year over year retail industry numbers overall, the increase in retail that I saw, I think, was related to something that's not necessarily that wonderful for consumers, and certainly something that could affect people in the lower economic realm seniors and that sort of thing. And I'll leave it to Paul to kind of give us the review on it here.
Yeah, we took a look, Bruce, and you've probably been through the numbers much more than I have, but we look at January 2026 compared to January 2025, broke down the stats for and really came up with the differences from a percentages basis and a dollar basis. What jumped out at us right away was how much basically food, grocery accessories had gone up. And we of course, we all talk about it, but it was quite a bit. You know, food and beverage retailers, supermarkets, basically made up about $710 million of increases year on year. And then cars, which we all knew, had shifted a tiny bit to used cars and parts, but for the most part, new car sales had just plummeted for comparing the 2 years.
So it's just so interesting to see that. And then the other area, so yeah, there was some increases in average buying items, but really that was food and beverage going up in restaurants. That was food going up in grocery stores in a lot of ways. Then the other one that got me, and I found this a little bit disturbing, was pharmaceutical has gone up. But it's really, I think, reflective of the cost of the items, not profitability, not consumer of cash available.
Yeah, you're right. No, I mean, if you look at, let's take the grocery sector as an example, right? Like the grocery sector has very, very low profit margins. I did an analysis recently, and I think it was about 4% in Canada net income, 3 to 4%.
Wow,
2 to
it is low.
4%. So it's you're really, you're not making a lot of money. They work on volume. So the issue that the grocery industry had is that there's significant input cost increases around the world for different commodities. And some of it's not around the world, some of it's local, like the price of beef based on herd, the price of coffee based on different weather patterns and things of that nature. And even large consumer packaged goods companies, since the pandemic, have taken price as a way to meet their earnings targets. They've increased price. So it's a really tough industry, and it hits Canadians on the front line. That's why what you're seeing is a lot of Canadians have changed the way they've shopped for groceries. They're buying more private label. They're shopping more at discount banners like No Frills and Maxi in Quebec to save money. They're buying more frozen food versus fresh food. But that's sort of, that's one of the things that is a big issue for Canadians right now, right? And it's not the only thing. You look at, rents have come down a little bit, but you look at the price of housing, you look at other input costs, insurance, etc. It's really difficult for a lot of Canadians to make ends meet these days. So what you're seeing is Canadians take fairly drastic approaches in terms of how they shop to save whatever they can.
The other thing that you touched on it just now, as we look at these numbers, and Paul, maybe you can straighten this out for me as well.
Sure.
We look at these numbers year over year, and it doesn't necessarily mean that we're doing good as an economy nationally. It just means that we're spending more. It doesn't mean that we're making more. It doesn't mean that our economy is booming. This one sector is doing very well in a number of very specific areas. Outside of that, I don't think that spending in retail, and maybe Bruce, you could kind of touch on this, I don't think it has much to do with how we're doing as an economy as Canada.
Yeah, it's a real tough one because, we've all seen the GDP numbers. We're not necessarily lighting it up as a country right now, right? I think our GDP was down in December. But we are looking at inflation, and there is a bit of a disconnect. There's something in retail and other commodities a lot of economists talked about called the K-shaped economy, where what you're seeing is more of the affluent folks, call it the top 20, 30% of income, are doing most of the spending these days, most of the increase in spending. And the other folks, because wages haven't necessarily kept up with inflation over the last 50 years, they're really sort of tightening their belt. So on the surface, things look one way, but when you really dig into it, there's sort of different demographics in play here. But no, I would agree with you. I mean, even retail sales going up a little bit doesn't necessarily mean that we're doing well as an economy.
Well, it's interesting, Bruce. I was telling Mike before the show, and we were talking about how we used to shop in the early 90s and how we used to go from the open markets to the discount stores. So you might hit 4 stores to do your shopping. And then somewhere kind of around 2000, we got away from that and we started just to go to one store. Well, I find even my shopping habits now are going back to going to multiple stores.
Yeah.
But I'm still seeing the increase. And it's interesting from looking at the StatScan comparison January 25 to 26. I kind of looked at it. Anything that I put in my mouth that's on this chart has basically gone up almost by just a little under $2 billion month to month, year to year, or year to year. So it's interesting how that's kind of changed my shopping habits. So
No, I'm in the same boat. I think that many people are. You go to the place where you're familiar, you get good quality items that are that price based on that store.
exactly.
I can't trust the big grocery stores to have all of the items actually in stock that I want, good quality like I like, and at the price. You have to really shop now.
But still Canadians are paying more. That's the interesting part. And that's, the squeeze that I felt, when I mentioned the late 80s, early 90s. That's sort of what we felt at that time. It's interesting, you take that, and I looked at the gas stations expenditures were down almost,
Well, that's going to change. That's changing as we speak.
well, it's interesting. Before gas prices, right? So now you're going to look at this probably, in March and April now, and you're going to see this massive spike. So you're
Right.
going to see the swing of this, which is then going to show, to your point and Bruce's point on numbers for retail spends, it's going to show a substantial increase. But, I'm watching now. I don't know if you're, wherever you live, Bruce. I know where I'm traveling this morning, I was going between 2 businesses and I was using the 400 highways. No one. It was quiet.
It's very
I was
quiet.
actually, my drive time was about 15, 20 minutes faster. My Waze was not flagging, 18-minute delays. I was moving, and this has been all week long. And it's funny because most of the March break is kind of coming to an end in
Yeah.
Canada last week. So a lot of March break, there is some stragglers, but
It's funny that you say that. I thought this morning, is this March break or was it last week? Because it was so light on the roads.
it
tonight.
was technically, so it was. A lot of
Yeah.
private schools are still out, for a couple weeks, but for the most part, we've seen, a real difference in traffic this month. Gas prices have gone up. So are we going to see the counterbalancing between gas going up and people's, number of kilometers they put on their driving?
Well, yeah, it'll affect, I guess, the car parts. It would then affect car sales, car leasing.
Which is interesting because that was the comment I made to, at the beginning of the show. New car sales dropped. It dropped to actually almost 700 million year on year. We start to see again used cars. And it's so funny for coming through COVID, I used to make a comment to my wife, say, it's not like the old days when we used to see a lot of used cars, a lot of 10-year-old cars, a lot of, parts stores, auto mechanics. You used to see a ton more auto mechanics. Now it looks like we're going back there again, right? It looks like we're going back to people going to the used car lot, buying a used car, keeping it on the road as long as they can keep it on the road. All those things.
Accessorizing rather than trading in.
And these stats, are starting to tell that story. That's what I love about the numbers. What you do, Bruce, is really interesting to me because just sitting there and watching the human behavior trends that tie to the numbers is so interesting.
Yeah, and you're right. I mean, without dating myself, I'm 59. I almost feel like we're starting to slowly go back into the 70s again, where inflation was high and consumers drastically changed the way they consumed. They fixed things instead of buying new things.
Mhm.
They ate at home more instead of going to restaurants, et cetera, just like you're mentioning. But yeah, you're starting to see that. I mean, it's going to be tough if the conflict in the Middle East continues for much longer. You're going to start to see more inflation hitting not just the pumps, but also goods and services, or goods, I should say, on retail shelves, because the transportation cost to move those goods is going to be negatively affected by the increase in oil. So you're going to see probably some discretionary categories hit even further, including the restaurant industry, et cetera.
It's interesting because, a double whammy in some industries. We were prepping for the show on the lawsuit with Meta and YouTube this week. And I was listening to another podcast, and it was prior to the court decision. And he was talking about the fact that with the Middle East having so many challenges and the potential for infrastructure damage throughout in each of the countries, that would cause the families that control each of the countries to stop their investment in high-tech industries in North America. So it's an interesting chain
They're going to
reaction.
have to focus their
Money
dollars at
homeland.
home.
They're going to have
Yeah.
to try to fix the infrastructure of their own countries, and they won't have as much outside investment company. You look at that, and then the double whammy with what's going on there. If the tech industries drop in the U.S. right now, which is a big part of their stock markets,
Yeah.
it would cause a huge ripple effect through the stock markets at all levels, which would then kind of cause our economy. On top of this lawsuit that just came, you're going to watch, these numbers as Bruce was alluding to. You're going to watch kind of how that ripples through expenditure numbers and what that causes. And it's so interesting to see that those world events are tying into these retail sales.
The other thing that occurred to me as I took a look at this list is apparently we are all done. We all have the tech we need right now. Tech sales are down dramatically. And I really do believe that it's that we're in that place with our own expenses in life where you've got to keep that phone the extra couple of years. There will be no trade-in because it's just not feasible. That MacBook that you bought 3 years ago is not going to be traded in this year. I think that we have all settled on tech there's nothing fantastic and new about any technology you bring home. We've all got a flat screen TV. We've all got a notebook. We've got our phones, and we all have Chat GPT. Heaven help us. So once we're all equipped, I see this number go down, and it's not a small drop. It was somewhere in the neighborhood of around 4%. It fell off over year over year. The other one that I noticed, and maybe you can comment on this, apparently nobody's drinking anymore and everybody's getting high. Liquor sales fell off almost a 1.5 points. Meanwhile, cannabis retailers are reporting a 6.4% increase, or $29 million more in the industry.
Yeah, there's definitely been a trend over the last several years of younger people drinking less alcohol and enjoying cannabis more. That's definitely been a major trend with younger millennials, Gen Z. They're doing that for sure, and you're seeing that. You're seeing that in the sales of alcohol. You're seeing that in the sales of cannabis, which remains a tough industry.
Yeah, it seems like there's not a lot of winners in that industry as well.
The one that did interest me quite a bit, which I think I have a handle on, but I'm not sure. That's why I wanted to ask Bruce. Two of them that really did, that went up, which was interesting in spend, which was clothing, which I was a little shocked that in January, year over year, we'd see clothing increase. Now, I wasn't sure if that was a sell-off of inventory, Bruce, or if that was just a trend of increased, clothing sales.
Yeah, it could be a little bit of both. I don't have exact data, but it could be clearance. You're right, because if things are a little tough for some retailers, they've got to get aggressive on clearance in January. It could also be weather patterns too. We've had a pretty tough winter in some parts of Canada where Canadians had to buy maybe warmer clothes and things of that nature. But there definitely isn't sort of an upward shift, in apparel. If anything, people have bought more from some of the places like Shein. From China, where that would deflate prices. So it's a tough category, very profitable from a retail perspective, but fairly tough category still.
Yeah, no, and I did think of that because everywhere I go now, it looks like 40%, 60% off. The other one I thought was interesting in the numbers, the StatsCan numbers, was the e-commerce numbers for January to January stayed relatively flat.
I noticed that as well, and I was going to try to address
and I
this
was like,
because
that's interesting, right? Or they might have burnt themselves out over Christmas, right? Because weren't the e-commerce numbers over Christmas really great, Bruce? Or from November onward?
Yeah, I mean, e-commerce as a trend has been increasing. It went gangbusters during the pandemic, as you know, and then after that, it sort of settled back down for a while. But since then, call it 2022, it's been on an upward trajectory again, and e-commerce had a pretty good fall. It just might be, it's probably a small base in January too. There's returns, if anything, and not a lot of sales, but e-commerce is here to stay. Definitely, if you're Amazon, they've invested a ton of money in the country. They've got great infrastructure here. So it's something Canadians love too. And in some places within Canada, you can order from Amazon and get it within a few hours. So it's just
and now Now Temu is also servicing Canada, I think, from within, opening up warehouses here as well. So even Amazon Light, as my family likes to call it, is now available in Canada, which is going to make a big difference. I think Amazon having competition to some degree. I don't think that they lose any business. I think just more business is brought to e-commerce.
Yeah, no, I'm with you. And the month-to-month increase of sporting goods, books, and hobbies, which was almost, to tell you the truth, $500 million year over year for January. I thought that was amazing. Now, Bruce, give me your opinion. I have my own sort of thoughts on that. I didn't get any time to dig into it, but is there anything in the sporting goods, books, and hobbies front that you're seeing, prior to January?
Wait, Bruce, hold on. Before you answer that,
Sure,
I would like to I'd like to write my prediction down first.
Okay.
All right.
Okay.
Give me the pencil after you're done.
Okay.
All
There you
right,
go.
Thank you. All right.
Okay.
Okay, Bruce.
Thanks for playing along, Bruce. And you
Yeah,
can
no
play along
problem.
at home if you want.
No problem. So yeah, I mean, I don't have any specific data on that, but my hypothesis is that there was some pretty good weather for some outdoor sporting goods, skis and things like that. But like I said, you're also seeing sort of two Canadas, right? You're seeing, if you're affluent, you're spending like never before. And some of these sporting goods categories cater more to the affluent folks who are making $400,000, $500,000 a year. But if you're not one of those affluent folks, you're probably spending less in this category because it's more discretionary. So again, that's where we start to see the K-shaped economy come in, where there's really two Canadas, depending on what income you have and how you spend.
Okay. What was your prediction?
Travel.
Me too.
Did you?
We can't travel. What are we going to do? Well, we better get a hobby.
Exactly. Right.
That's
They were
actually a
bored.
good point too. You're right. That's a
Yeah.
good point too, because Canadians are traveling less to the US, right? So they might be doing more domestic things. That's a good point too.
Oh, yeah. We got a pickleball. That's what we got left.
Did you? I know. I went and bought new skates, built a skating rink, remember, for the
That's
kids in the
true.
neighborhood, and I spent a ton of money on, ice prep stuff and shovels, and so yeah, I got a
That probably
hobby
was
just-
factor into it too.
I
Yeah.
think that must be some of it. That discretionary spending. You can't, you won't spend as much on hobbies perhaps, but they tend to listen. I think that this has been a valuable conversation. And as retail changes and as we get confused in the marketplace, Bruce, we will come back to you if you don't mind.
Sure, of course. Yeah, no problem. Thanks for having me on.
I really appreciate this. And thank you for joining us. Don't forget, subscribe, tell a friend, and for goodness sake, don't hesitate to donate and subscribe as a paid subscriber, because that's what keeps the wheels on the cart here and keeps us spending on retail. See you next time.
Patriotic means looking out for each other and fixing things together.
True patriotism is being in the country you love, surrounded by people you love, and great weather.
Being a patriot is being a part of your community and caring for it.
It doesn't matter who you are or where you're from, patriotism is the one thing we all share.
It's okay to be critical of government and still be a patriot.
It's gratitude to your country.
Of course I'm a patriot. I'm Canadian. It's my home.
Well, actually, true patriot love is the mission.